Welcome, everybody. Thank you for having me today. My first question usually is, how many people have seen my presentations in the past? Obviously, Y for yes, and for no. That way, at least I'll know how much time to spend on each. Okay. Oh, lots of no's. All right. All right. My name is Steve Bigalow. I started candlesticks by accident 40 some odd years ago. And I was a stockbroker, got out of the business because I realized that most of the brokerage firms had no idea about what made prices go up or down. So then candlesticks, somebody dropped candlesticks on my desk, and I figured anything as unsophisticated sounding as candlesticks wasn't worth the time or effort to even bother with. So I eventually picked it up, and the one basic underlying factor about candlestick analysis is that it's all common sense put into graphic depiction. And there's one basic fundamental about prices. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And candlestick analysis is merely the graphic depiction of what's going on in investor sentiment. So what I have done, we're going to be working on the T-line. The T-line is a trend indicator that works extremely well with candlesticks. So candlestick analysis is just the graphics that the Japanese rice traders have illustrated for us to tell us where do most people buy. They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. And prior to candlesticks coming along and me understanding this, I was usually the one panic selling down here, and I was even a stockbroker. So you can imagine there's a slew of clients out there from the 70s that didn't do very well. But what the candlestick logic is, that if you see what signals are occurring in overbought conditions, you can get ready to take profits. And the same scenario is we're looking for the reversal signals, which are basically the 12 major signals. Now there's 50 or 60 candlestick signals out in the candlestick universe. And I wanted to study every single one of them, but I discovered there was only 12 that occurred often enough to make it worthwhile. So there's two basic benefits of candlestick analysis. One, it visually shows you when there's been a change of investor sentiment. And two, after 400 years of analysis, the Japanese rice traders could tell us what the psychology was that created those reversal signals. So when you had that combination, you pretty well can analyze a market trend with the same insights as somebody that's been trading in the markets for 50 years. So here's our trend analysis indicators. We've got candlestick signals, we've got candlestick patterns. The stochastics pretty much tell us where we are in the trend, and everything else that everybody else is watching, we have the benefit of seeing what the actual investor sentiment is at those levels. So when I started learning candlesticks, I learned everything I possibly could because I didn't have anybody out there where I could get a second opinion. I always tell people the only time I could get a second opinion was when I would go to the doctor. I'd say, "What's wrong with me?" And he'd say, "You're fat." And I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So what I discovered was there are signals and patterns that this is what I call convergence analysis. Notice we have a bullish engulfing. This is one of the 12 major signals. Right after a doji, this is one of the strongest reversal combinations, which we call a left-right combo. if you add the stochastics, my stochastics are set at 1233. Who did you learn the candlestick patterns from? Somebody dropped candlesticks on my desk. I was buying houses, renovating them, and reselling them in Atlanta, Georgia. And somebody knew I'd been a stockbroker, so they put some old analysis or old information on candlesticks on my desk, and it sat there for 3 months before they badgered me enough that I started taking a look at it. And when I started taking a look at it, the thing that popped out at me was, this makes sense. So the more I looked into it, the more sense it made. So again, the one basic analysis that we can get out of candlesticks is everything in it is just common sense. When you look at a candlestick chart and you see what the signals are and the patterns, and when the buying and selling starts, you pretty much say, yeah, I knew that. I just don't do it, because what's our biggest bugaboo in investing? It's our own emotions. It's hard to buy at the bottom and sell at the top. So knowing that I was the worst investor in the world, and I was always buying up here and always ask myself, how come as soon as I buy, it goes in this direction? Or as soon as I sell, it goes in this direction? It would just make common sense to say, all right, I need to watch for the reverse. I need to see when the buy signals are occurring. So on our charts, you'll see that they're very simple. We've got the 200 simple moving average, the 50-day simple moving average. And the reason we have those moving averages on our charts is because every major money manager around the world uses those to make decisions about their portfolio. We put it on our chart because the candlestick signals tell you exactly what those decisions are at those levels. I've also got the 34 exponential, which works well, but this is the one we're going to concentrate on, the 8 exponential, which is the T line. Now, moving averages act like magnets. Why is that? Because if you're a major money manager and you decide you're going to buy a stock and it's drifting back, what are you going to do? You're going to probably wait until it hits a support level like the 50 or the 200. So there's no great buying until it gets to those levels. So the prices move like magnets, or act like magnets. So again, here's the 50, here's the 200, here's the 34. And then what we're going to be looking at today is what we call the T line, this black line, the 8 exponential moving average. That's more the same. You can analyze anything you want to. A lot of people say, well, does this work for Forex? Does this work for futures? Candlestick analysis is merely the graphic depiction of what's going on in investor sentiment. And anything that you're trading, whether it's stocks, bonds, futures, currencies, tulip bulbs, anything that has fear and greed in it, candlestick charts will identify. So you can see how we can use the T line as a strong indicator confirming our trend until we see a sell signal and a close back below the T line. So there's a very simple T line rule that if you see a candlestick buy signal, you can stay long until you see a candlestick sell signal and a close back below the T line. There's going to be times where you close back below the T line without a reversal signal. There's other times where you're going to have a sell signal, but it doesn't close below the T line. It works both in the bullish direction as well as the bearish direction. So what is the T line? Basically, it's the 8 exponential moving average. So why is it something to look at? Because if you put it on your charts, you'll see that trends work very effectively. So it acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. So I tell people, don't be afraid to put it on your chart because it works extremely well. I tell people, shoot, the first time I had sex, I was so scared. But that's because it was dark and I was all by myself. But as you can see, this trend, you can stay long until you see that sell signal and a close back below the T line. So the first thing you can do is analyze which direction your trend is moving and then analyze which stocks are moving the best during an uptrend or a downtrend. So candlestick signals have truism. Again, you can buy and stay long until you see a candlestick sell signal and a close below the T line, with the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So this becomes another clear alert that when you start seeing dojis, which are one of the 12 major signals, when it comes back or starts selling off, there's a very simple doji rule. The price is usually going to move in the direction of how they open after a doji. So if we're up here in the overbought condition, we've moved that far away from the T line and it's opening lower, we close out the position because where's our first likely target? Back here to the T line. What's the worst case scenario? If it does what we call a J-hook pattern, supports at the T line, we can always buy back. But it also keeps us from holding on to something that's moving in this direction. So whether you're analyzing a stock or the indexes, the signals are very clear. If you're analyzing the direction of the Dow, here's an evening star signal in the overbought condition. When does it confirm that our downtrend is, or our uptrend is over? It confirms the next day by closing below the T line, which does two things. Confirms our sell signal and tells us the T line's not acting as support. Comes down here, there's our morning star signal with confirmation bouncing right off the 200 with a doji in the oversold area and closing back up above the T line. We can stay long until we see that sell signal and a close below the T line. This is not rocket science. This is just clear, common sense graphics of what happens in human nature time after time. I use candlesticks as my main criteria for investing. Then you can apply everything else that you want to, whether it's using Fibonacci retracement numbers, using the trend lines, using moving averages to tell you exactly what's happening at those levels. If you've got a good trading program that you're already using, or you're using somebody's indicators or their program, if you lay candlesticks on top of it, you'll see you can analyze everything much more clearly. So this allows for the absolute entry and exit strategies. If you're long and you see a sell signal to close below the T line, that tells you this trend is over. If you're short, tells you when you see the bullish harami, which is one of the 12 major signals, right here on the 50-day moving average in the oversold condition, it tells you probably want to cover your short position. And when do you want to go long? If you see a candlestick sell or buy signal in the oversold area and they gap it up the next day, that not only tells you you had a reversal, but they're coming back into it with great enthusiasm. As soon as it looks like it's closing above the T line, you can be buying until you see a sell signal. Again, this creates the ultimate timing. Netflix, when it started taking profits, we could see exactly what the investor sentiment was here at the 50-day moving average. The fact that they gapped it up through the T line the next day told us we want to be buying immediately, whether you're buying stocks or calls, until you see a sell signal, and then probably taking profits back to the T line. There is about 8 different patterns that reoccur that candlestick analysis really points out. First of all, you got kind of a fry pan bottom. That's one of your major reversal signals. This is what we call a bobble pattern. Notice how when it came up to the 50, we had a sell signal. But notice what the sell signal did. If you close this position out, what was our next observation? They still couldn't close this below the T line. That told us that if they came back up through this level, the 50-day moving average, which was acting as resistance, we want to be buying again, because that tells us we're probably in our next wave to the upside. How long do we hold on to it? Until we see a sell signal and a close back below the T line. Now, the bobble pattern is just merely a J-hook pattern that is more visually definable. That if you took the 50-day moving average out of here, you still have a J-hook pattern, which is one of the strong candlestick patterns. So this is where we're looking for pattern breakouts. Notice how the T-line acted as support. This big fry pan bottom, where was it that investor sentiment got enthusiastic? Right here, where they started breaking out through this pattern, or this resistance level. This is what allows you to sleep well at night. It used to be that I would, and I know a lot of people would say, oh, I got a good profit, I better take a profit, because I sure would look stupid if I just let this turn around and go back to a loss. You get rid of that emotional conundrum by just saying, all right, I'm just going to stay long until I see a sell signal and a close back below the T-line. We have the cradle, or the scoop pattern. You can see how we have a flat handle and then the scoop with a left-right combo, and then notice how long you stay with this. You can take profits when you start seeing that you've moved too far away from the T-line. That's probably the area to start coming out of that position. So candlestick signals are merely the graphic depiction of what is occurring in human emotions. And as I mentioned before, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. The T-line is a moving average. Yes, it's the 8 exponential moving average. And it has basically Fibonacci type characteristics, which means it acts like a natural support and resistance level. So candlestick analysis is very simple. You look for the reversal signals. Where are they occurring in stochastics? Obviously, a candlestick buy signal in the overbought area doesn't mean very much. A candlestick sell signal in the oversold area doesn't mean very much. What we're basically looking for is a candlestick buy signal in the oversold area, and then where is it in relation to the T-line? Again, with the truism that the further away we move from the T-line, the higher the probability it's going to come back and test it. So if you apply just simple common sense into this trend, when they gap this up well up in the overbought condition, look how far away you are now in the overbought condition away from the T-line. This makes for some very simple profit-taking stop loss procedures. For all money managers tell you to let your profits run and cut your losses short. In the 40 some odd years that I've been investing, I've never heard a single one of them tell you how you cut your losses short and let your profits run. Candlestick signals do it with very simple common sense. If you see a gap up in the overbought condition, moving that far away from the T-line, and it starts trading positive, logic says you just put your stop one tick below where it opened. Because if it comes back down through there, it's probably creating some sort of candlestick sell signal. On the other hand, if it opened here and started trading off, your safety stop is at the previous day's close. Because if you've got enough selling pressure to bring it down through there, it's time to be out of that trade. It works on any time frame. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute combination. If I'm buying something and have a good trade in it, I get ready to take profits when I see sell signals and a close back below the T-line on my 10-minute chart. So once we close below the T-line, you can start entering short, but then what do you start looking for? Look how far away you've moved from the T-line and you're starting to see indecision down here. That's telling you the probabilities are that you want to start covering your short positions, because that's where the investor sentiment is coming back on the bullish side. So you're looking for the signals and you're looking to see where the T-line is. So if I'm starting to see sell signals up here, what's my final alert? I don't want to see it close or trade back below the T-line. I can see where the resistance level is occurring. Now this setup right here is what we call bearish doji sandwich, which has a big dark candle, a doji, and then there's a simple doji rule. It's going to move in the direction of how they open it after a doji. Well, that means if this is still in an uptrend, it needs to open positive and trade positive. The fact that it opened lower told us to get out immediately because it wasn't heading up anymore. It was got the possibility of a doji sandwich. Again, we're looking for the reversal signals. This is just a very simple concept that will dramatically improve your probabilities and your analytical abilities to see what's going on in a trend. If you have the T-line on your chart, you can easily identify when there has been a trend change. There's your sell signal. There's your close below the T-line. Notice what it didn't do that whole way up after a big buy signal. Never closed back below the T-line. So what happens when you're trading a pattern? Well, look at where we were buying here on this fry pan bottom breakout. How long do we hold on to this? As long as it doesn't close below the T-line. But remember our caveat, the further away it moves from the T-line, the higher the probability it's going to come back and test it. So when we can see that alert that we're too far away from the T-line, what do? We just go to our 10-minute chart. Now this was that first big day. It closed right in here, but what'd that tell us about our trading day? It was still up here. It was still a big candle. Then they started gapping it up a little bit again and traded it off. So what do we do at that point? Do we get out here or do we get out here? Well, we can see that they opened it. We closed it out when it came back through here, and then we bought it back right here. Why would we buy a stock back when it's well in the overbought condition? Here it is a little bit bigger, because we know what the results are of a fry pan bottom breakout, that it's going to be a very strong price move. And as long as our 10-minute chart tells us it's staying above the T-line, we stay long until we see that final sell signal and a close below the 10-minute T-line. So the gaps act as alerts. Notice on this one where it broke out, had some nice gap ups, and then gapped up here with stochastics now in the overbought condition. You just add up all these factors. That tells you you're way too high, that if they started trading higher, your first stop was right there. If you didn't have time to set it before they came back down, your stop was right here. So everything built into a candlestick chart is just merely common sense, telling you where the bulls and the bears are in control. On the sell side, or on the buy side, or if you were short, where do you cover your short? Where do most people panic sell? They panic sell at the bottom. You see a doji after a big downtrend. What's our simple rule of the doji? If it opens positive the next day, we're covering our short position, because where's our next likely target? Probably back up here to the T-line. This is where you start learning, say, all right, got a nice profit. Now I'm seeing a bunch of dojis. What's that tell us? We're seeing a bunch of dojis. If one doji means indecision, a series of dojis means greater indecision. We're getting ready to take profits. Soon, when they gap this down, we're out of the position. Now what is our next prospect? Well, we might be ready to go short, because what can we do as far as seeing where the targets are? Well, if it breaks through here, it's here, or we can put Fibonacci retracement numbers. All we're looking for is levels that everybody else might be watching. We'll be able to see much more clearly where the reversal signal is, or where the selling has stopped. This was just yesterday. What is today? Yesterday. This is what we call our Bobble Breakout. Notice our morning star signal kept us up above, or brought us back up above the T-line. Did a doji type day. Now you can add all the elements of the simple rules of candlesticks. Is it's not closing below the T-line. is doing a doji. If it opens positive, it's going to trade positive. If it opens positive, it's more than likely going to do a doji sandwich, which means this candle here is going to have at least the same magnitude as this candle here, which basically tells us the 50-day moving average is not going to act as resistance. It allows us to get into positions that we could be buying right here, knowing what the pattern is. And where is everybody else buying? They're buying all the way up because they finally see that it's broken through the 50-day moving average. Candlestick analysis just gives you a graphic depiction of what's going on in human nature and gives you the good ultimate trade setups for timing as well as the big price moves. So this was today, edit. When I did this last night, we were looking for edit to open positive. It did start trading positive. I don't know where it is right now. But then again, there would be your Bobble Breakout, giving you a high probability move to the upside. This is the Dow right now. You can see, well, let's see, the Dow is trading right about in here today. You can see what the trend is. They're still trading right here at the T line. Now they're trading up and down, up and down. So a lot of people ask, well, what's that tell you? Pretty much tells you they don't have any direction going on right now. Also, the NASDAQ, which I don't think I put on here. No, I didn't. Came right up to the T line yesterday and needed bullish confirmation, which it didn't get. I think the NASDAQ started trading off. That just told us our markets are still in kind of a sideways mode. Now, that doesn't bother us as far as candlestick investors because you can scan all 10,000 trading entities in less than, if you don't know what you're doing or you're still learning, maybe 20 minutes each afternoon finding the best trades for the next day. I can scan through with the scans already set up, which are very simple. If you can describe a candlestick signal, then you can write a very simple formula for it. And then each day you scan for it to see whether you've got dojis in the oversold area or bullish engulfing signals. But there's about 10 or 14 combinations, such as if you see a doji type day followed by a gap up, that's what we call your best friend. Call it your best friend because not only is it showing you there's a high probability there's been a reversal, but there's also a high probability that reversal is going to be very strong. So once you understand what's happening in human nature, you've got a much stronger grasp. So that's why I was saying before, if you've got a trading strategy that you like, well, if you put candlesticks on your chart to analyze it, you're going to see it much more clearly of what's happening. All right, so that's about all I got. Remember, the T line, if this is the most powerful, is it an indicator? The T line is the 8 exponential moving average. That's all it is. But here's the most powerful concept of candlesticks. If the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T line is a natural support and resistance level of human nature, when you combine those two, you have an extremely powerful combination that will put you in not only profitable trades, but if you're using the patterns for breakouts, it's going to put you in the right direction in very strong trades. So when I started candlesticks, I was the worst investor in the world. Once I started applying candlesticks, I've pulled money out of the market ever since then. The green line is, if it was on here, is what we call the 3T line. That's the 3 exponential moving average. It's got a very simple concept that if you start moving too far away from the T line and it closes below the 3T line, it's probably coming back to the T line. So it just gives you a little bit faster in and out process. Now, I put out 2 or 3 stock picks every day in our members area, and these stock picks aren't so that you just have stock picks. I do it in a video format, usually about 2 minutes each evening, and I'll put out 2 or 3 picks. If I think the market's heading higher, we might have 3 long picks. If I think the market is definitely heading lower, we'll have 3 short picks. If we don't know which way the market's going, you might have 2 longs and 2 shorts. The stochastics are 12-3-3, and that's nothing set in stone other than sometime when I was sitting at my computer 40 some odd years ago, they were the normal stochastics at that time was 14.55, but they were a little bit slow for what I was doing. I'm mostly a swing trader. So I just sat there one night and said, where's the peak at the peak and where's the bottom at the bottom? And 12.33 has always worked pretty good for me. So again, I put out 2 or 3 stock picks every day, not so that people have stock picks, but so that people can learn why that pick was being made. Our website is to teach people how to use candlesticks. Plus, you have the benefit of our charts or our chat rooms. We've usually got about 130, 150 people in there each day, with some people that are experienced and identify very good chart setups. So that becomes a source. And it's a good place to ask questions. That's where people can learn a lot faster how to use candlesticks. Again, I don't put out the picks so that you have picks. We put them out so you can learn. If the old adage that if you just tell somebody what to do, they aren't learning anything. It's like the explain it as the cop standing on the street corner and he sees this car weaving down the street. And he blows his whistle, pulls the guy over, and the drunk's sitting at the wheel, and he looks in the back seat, and there's a penguin sitting there. He goes, what the heck are you doing with a penguin in your car? And he goes, oh, I found him out on the street, and I don't know what to do with him. And the cop said, well, take him over to the zoo. The drunk said, oh, that's a good idea. I didn't think of that. Well, the next day, the cop's standing on the street corner, and this drunk comes weaving down the street. He blows his whistle, pulls him over, walks up to the car, looks in the back seat, and there's a penguin sitting there. He goes, I thought I told you to take the penguin to the zoo. Drunk said, I did. He liked it so much. Today we're going to a baseball game. So if you don't know why you're doing something, it doesn't do you any good. Why do you use 3 MTS and 1 MTS? What is 3 MTS? Why do you use 3-minute charts and 1-minute charts? Back then when I was trading the E-minis, I was trading very fast. Again, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. They work just as effectively on a 1-minute chart as they do a monthly chart. So depending on how fast you want to trade, if you're a day trader, trading in and out, you can use a 1-minute, 5-minute, 10-minute combination. What type of EMA? Exponential moving average. The 50-day is the simple moving average. The 200 is the simple moving average. People say, well, why don't you use the exponential? Because we're not using it to make our decisions. We're using it to watch to see what everybody else is doing, because that's what they have on their charts, and see what decisions they're making. So candlestick signals, once you grasp that that analysis, now you can analyze anything that you're trading. Your system of analysis, candlesticks, and other indicators are any trading? No, they're for all trading. No matter what you're trading, our formulas are on TradeStation. They're on Thinkorswim. Ninja Trader. I forget all the different places, but our formulas are there. Plus, Metastock, Warden Brothers. What number, short period, long period, single period? I don't understand that question. What number? Oh, so what, so once you understand the mechanics of candlesticks and the psychology behind them, you've got a very strong grasp of what's happening in a price move. The 34 EMA or the 34 EMA Sam just seems to work. It works mostly for trading futures, but it works just as well on stocks. Now we've got a weekend coming up, this coming weekend, where we go through 2 days of candlestick analysis. And I don't know how to send this to everybody. Oh. Shazam. All right. Well, anyways, the 2-day, let me figure this out while I'm talking. The 2-day training starts with the basic of candlestick analysis, and that's going through the 12 major signals. Oops. That's not what we want. We go through the 12 major signals, and then we go through the patterns. Once we do that, we go through very simple strategies for how you improve your probabilities for entry and exit strategies, where to set your stop losses, how to do simple scans. Again, I can scan for the best trades in less than 10 minutes each afternoon once you have your scans set up. I think I got the link in there somewhere. Again, once you understand the common sense that's built into candlestick analysis, you're able to analyze any market after that, whether you're trading the Forex, trading stocks, bonds, futures. So this is 2 days starting from 9 on Saturday morning. We go to the 3 or 4 o'clock in the afternoon until everybody falls out of their chairs. But the basic premise of all this is, once you see how to use candlestick analysis in a chronological order, your perspective on how to invest is going to be dramatically different. You're now going to be trading with what I would say the smart money. You're going to be buying at the bottom, you're going to be selling at the tops, you're going to be able to identify what human nature patterns usually are going to produce the biggest price moves. So once again, because I was one of the worst investors in the world before candlesticks came along, I had the benefit of seeing exactly where I was selling at the wrong time and buying at the wrong time, and changed everything 180 degrees. Now I don't have the emotional trauma of knowing when to get in, when to get out, and using the T-line, knowing when to continue to hold that position until it's time to actually sell out that position. Okay, I guess that's about all I got. Are there any questions that sorry, I meant to use, you use, Richard, the reason we use the 50 and the 200 is that's because every major money manager uses those. We're just looking to see what their decisions are when they whoops. We're just looking to see what their decisions are at those levels. John, I don't have a track record. That all I can tell you is I've been trading profitably now for many years, enough to have a great life. I've got about 20 classic cars. I collect old music machines, Edison cylinder players, old Victrolas. So I make a very good living. I don't have to worry about doing anything other than trading. Using the T-line for day trading. It works on the same way, same patterns. Yep. Whatever you can see, whether it's a wedge formation, a wedge breakout, a flag, whatever you want to call them, you basically have the advantage, much greater advantage of seeing what's occurring based upon what the candlestick charts are revealing. Yes, so I have a whole, we're going to be doing that over the weekend, where when you see a wedge setup, you can see exactly which way it's going to break based upon the candlestick signals. All right, again, this weekend is going to be a, what I call it, consolidated 2-day training weekend, where we're going to start from A and go through Z. And once you're done with it, I can guarantee you're going to have a completely different perspective on what you're going to be looking for as far as trades. You don't have to worry about trading on news or anybody's recommendations. Thank you, Michael. Okay, am I just about out of time?
You just got 1 more minute.
1 more minute, all right. So in 1 minute, you have to babysit your candles. No, D, if you're a swing trader, yeah, I can sit back and trade every day. So I tell people in 1 minute that you don't have to overanalyze candlestick analysis. It's like the lady that brings her parakeet into the vet, lays it down on the table, and said, "Oh, my parakeet is. Can you help him? He's been my best friend for years." And the vet says, "Well, ma'am, I think your parakeet's dead." And she goes, "Oh, isn't there anything?" So he said, "Well, let me look." He goes back to the back of his clinic, brings up a cat, lays a cat next to the parakeet, sniffs it, looks up at the vet, shakes its head, and said, "Ma'am, your parakeet's dead." And she goes, "Oh, are you sure? He's been my best friend. Isn't there something you can do just to make sure?" And he goes, "All right," goes back to the back of his clinic again, comes in with a great big Labrador retriever, puts its paws up on the table, sniffs the bird, and shakes its head up at the vet. He goes, "Ma'am, I'm sorry, your parakeet's dead." She goes, "Oh, no." So they go out to the front desk, and he goes, "All right, that'll be $250. She goes, "You're charging me $250 to tell me my parakeet's dead?" He goes, "No, ma'am, I would have done that for 18 bucks. Then you wanted a CAT scan and a lab report after that. So you don't have to overanalyze candlesticks. It's all common sense put into a graphic depiction. All right, thank you, everybody. Yeah, if you hit down that link, you'll see what all the costs are for the weekend. It's well worth the money. All right, thank you for having me. Everybody have a good day.